Hello, my name's Graham from Carvetti Properties. Many years ago, a college lecturer of mine defined common sense as the obvious after it has been explained. Well, I came upon a piece of common sense earlier today that actually needed explaining to me. And I thought I'll make a quick video about that to share that little bit of common sense for other people as well. The topic is stocks and bonds. Now, a lot of people have got their pension fund invested into stocks and bonds and have other investments in stocks and bonds as well. And it's quite common to hear people say, well, stocks are quite volatile and you want the upside, but you might get a bit of downside of that, whereas bonds are much more stable and steady. So go for a 50-50 split between the two, and that will hedge the potential downside, but give you an opportunity for the upside. The problem with that is that it actually means that you end up with the level of risk very much skewed towards the stock side of your portfolio because of that much greater flexibility in the market valuation of shares and its fluctuations. And it can be something like about a 5% to 95% risk share, the larger portion being towards the stock values. So there's an American guy called Ray Dalio that done some research some time ago and looked back over the last 30 years and has come up with a formula that is a much better performing way of spreading your risk across your portfolio. His suggestion is your stocks should be about 30% of your portfolio. Intermediate bonds, 15%, long-term bonds, 40%, gold, 7.5%, and other commodities, the other 7.5%. And that pattern of spreading the risk and spreading the money around different commodity types and investment types has well overperformed the general market trend over the last 30 years and is something that is much more effective than just sticking it into stocks and bonds, and is something that I'm going to be looking at in the next couple of weeks to possibly reposition some of my investments to take advantage of that better long-term stability of investment. As I say, my name's Graham from Carvetti Properties. If these little links, hints and tips are of interest to you, hit the subscribe button to be notified about any of the new ones that I post, and by all means give us a like, and any comments that you'd like to make in the chat below, I'd look forward to receiving them. Thanks very much.